All right, hot topic today, seller concessions, and namely seller concessions with the VA loan. This comes up a lot. There's a lot of confusion about it. So I wanted to make this video today, guys, so we can just get it all out of the way, really differentiate what the differences are, and really what makes VA loans and seller concessions unique, how we can structure them to help you win utilizing your VA loan in a lot of different ways. And so I'm going to go through some examples today with that. Everybody, welcome back. My name is Aaron Dehart. And again, thank you for watching. If you haven't had a chance to already, please give us a like and a subscribe so we can keep the almighty VA algorithm going. So today's hot topic, guys, VA seller concessions. And I literally get asked this question multiple times a month. There's a lot of confusion about it. People think that the max is 4%. But there's different buckets that the VA really breaks it down into that can cause a lot of confusion. So what I'm going to do today is actually read some snippets directly from the VA 26-7. And if you've ever watched any of my other videos, that is basically the VA guide. That is the VA handbook that us lenders use and that underwriters use so they can underwrite your files and get them approved with the VA. So let's talk about it today, seller concessions. So the definition, particularly from the VA, and I'm going to read this directly from the guide here, for the purpose of this topic, a seller concession is anything of value added to the transaction by the builder or the seller for which the buyer pays nothing additional and which the seller is not customarily expected or required to pay or provide. So let's take a look at that. So here's the definition of seller concessions per the VA. So their seller concessions can include, but are not limited to, the following. So a percentage of the VA buyer's funding fee. So if you've watched other VA videos before, you know that unless you have 10% or more disability, the VA loan has a VA funding fee. Prepayment of the buyer's property taxes and insurance. So any prepaid items that are in your escrow account. Gifts such as a television set or a microwave oven. Payment of extra points to provide permanent interest rate buydowns. Provision of escrow funds to provide temporary interest rate buydowns and payoff of credit balances or judgments on behalf of the buyer. Seller concessions do not include payment of the buyer's closing costs. So unlike other loans, guys, like FHA loans and conventionals, those seller concessions go towards that total cash to close. Seller concessions on a VA loan do not include payment of the buyer's closing cost or payment of points as appropriate to the market. So what that means is, let's say at the time someone's getting a VA loan and they're buying down the interest rate, and it's customary for a certain interest rate to cost 2 points. Like that's the norm for the type of environment that we're in at the time. VA does not count those points as appropriate to the market. So they even give an example. If the market dictates an interest rate of 7.5%, again, this is just an example, guys, I'm not quoting rates. If the market dictates an interest rate of 7.5% with 2 discount points, the seller's payment of those 2 points would not be a seller concession because it's customary and norm with what's going on with the market. If the seller paid 5 points to help buy down the interest rate, 3 of those points would be considered a seller concession then. So there's a lot of different ways to structure this, guys, to where you come out as a win-win. The big confusion is where that 4% limit comes in. So any seller concession or a combination of concessions which exceeds 4% of the established reasonable value of the property is considered excessive and unacceptable for VA guaranteed loans. However, the VA says do not include normal discount points and payments of the buyer's closing costs in the total concessions for determining whether concessions exceed the 4% limit. All right, so let's get an idea of kind of what some of those fees are, okay? So any type of a seller concession is going to be included if it's paying off, again, the funding fee, if they're using that to provide payment of the taxes and insurance for the escrow account, if they're paying off debt. Believe it or not, a seller can pay off a debt for a veteran. I've had a VA loan before where the veteran owed about $3,800 on a car, and the car payment was fairly excessive. It was around $600 something dollars. And in order for us to exclude that debt, we needed to exclude the debt to get the veteran to qualify. We got the sellers to agree to include that as part of the closing costs and the concessions, and they paid the car off. So pretty unique way to look at it. Again, so we can pay off credit balances. We can even pay off judgments on behalf of the buyer. So any normal customary closing cost that are associated with the transaction on a normal transaction are not considered part of that seller concession rule. So believe it or not, guys, if you get the sellers to agree, it's not uncommon sometimes that you can get 6%. Heck, it's very rare, 7%. However, you got to be with what's appropriate to the market. In a market like it is now where there's less competition, guys, this is one of the things I always encourage all my clients is, hey, if you're comfortable with the payment that you can do now, how we structured it, buy the house. Because when interest rates go down, and they will, you're going to see more competition. It's a lot easier to get your offer accepted how we want to structure it if you're the only one making an offer on that house, or if you're up against one other person. For every percentage rate that interest rates go down, you're going to see 1 million more people enter the market. Okay, that's 100,000 additional buyers per state on average. That's a lot. So instead of 1 or 2 offers on a home, you start seeing 10, 12, however many multiple offers. It's a lot harder to get those concessions taken care of by the seller. So in a market like we're in now, where it's less competitive at the time of this recording, it's May 14th, 2024, it's going to be a lot easier to have those concessions taken care of. Guys, I actually put a link to the VA guidelines right below this, because I've literally had people not believe me before, and I'm like, look, here's the VA handbook, here is the VA guide that says exactly what you can do. And guys, we actually have a really cool PDF that I just finished researching and writing last week. I'm going to put the link to that as well. But it basically is the consumer guide for VA home loans. There's a lot of information in there, so if you do sign up for it, we are going to be sending you weekly emails too, and little bite-sized chunks for you to digest. But it's something that I took a lot of pride in writing and creating, and I actually made one for all the different branches. So when you're entering your information in there, you actually get to put in what branch you served in or are serving in for us, and that'll get sent over to you guys. Guys, again, thank you for watching. If you haven't already, smash that like button, give us a comment below, and please give us a subscribe so we can keep great videos coming out to you. We lend in all 50 states, guys, and it's my honor. If you want to get a hold of us, my number's below. Also, you can send us a text, and the calendar link is below as well. Just please give us a heads up when you're doing that so we can give you the appropriate time that you deserve. Thank you so much for watching, everybody, and have a great day. We'll talk to you soon.